Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today's Tuesday, August 27, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Much of the same as yesterday. The market didn't really get very far today. She's basically looking at it from a big picture, holistic approach. She's basically eating time off the clock in the same area she's been over the last several days. She's above all the moving averages. The trend is your friend until proven otherwise. We know how that works. Let's take a look at this weekly chart, and I want to bring something to the forefront you may or may not be thinking about. So before, when the market was rising over here, in the July timeframe, end of July, and we were saying, I was saying, looking for a top, looking for a turn, because remember, I was looking for a low. You may not remember this. Folks in the live room remember this. I was looking for a low around the first week of August. Well, the market finally topped out, but one of the things that we were talking about when the market was going up into the middle of July, for example, is, she's getting extended away from home base. As markets rise away from the 20-period moving average, aka home base, she doesn't like to get too far from home base. There's no set measurement, but what we look back on the chart and we could see, well, how far does she really ever get away from home base? You can get a sense that she was around that area, getting a little bit far from home base. Well, guess what? Here we are again. Now, keep in mind, the 20-period moving average is rising, and it has been rising since that mid-July timeframe. So guess what? So since it's rising and it's a little bit higher now than it was before, we know that if she makes a new high, is she going to get too far away from home base? And the answer is no, she's not. Well, how much higher can she go above the old high? Well, I've done the mathematics. I think I told you last night. I'm going to put that to the forefront if and when she makes a new high. As soon as a new high comes, I'll populate a number. Here's where I think she's going. Here's a target and overhead resistance. I have the number. Inside the number members, live room members, they will have the number. It's what they're paying for. Back to the daily chart. All she's really doing when you look at this and you say, all right, well, what's this? She's just eating time off the clock. Where? Underneath the former high. So what's she doing? The deduction out of that is she's eating time off the clock, building energy under the old high, setting herself up to bust through the old high. That's what the building energy part would be for. Can she fail and go down and run a test into these moving averages or down here at 553 or 554 or 552, something like that? And the answer is absolutely, that can happen. What we're discussing is what is happening right now in real time. This is a fact. What she's doing at present is eating time off the clock. How will we know something material is changing? Write this down, put it on a sticky note. 553 is a bogey. Below on daily close, below intraday, hourly close, 2-hour close, 4-hour close, daily close below 553, and we're going to call that a trouble spot. It's not an end-all be-all. It's not exactly Irene just yet. Below 553, there is no upside on the board until they would be back above 553 at a minimum. 553, write this down, is a bogey. Is there anything material that we need to discuss additionally on the daily chart, on the SPY chart? Not so much. We can move it along. What about inside the numbers today? What happened in there? Did anybody make money today inside the numbers? Help a brother out. Post it under the video if you had a decent day inside the numbers. Did you catch low of day inside the numbers? Did you make a positive trade or two inside the numbers? Is there value inside the numbers? Help a brother out. I'm not the brother. Other traders out there looking for answers are the brothers and sisters. People out there looking for help. They know there's a way to make money in the market. They haven't found it yet. They haven't found me yet. They haven't found you yet. They haven't found this community yet. Help them out. Let them know if there's money to be made inside the numbers. How'd you do today for starters? Today was turnaround Tuesday. Not much fanfare overnight. We have a couple of important numbers on the board, 559.70. You'll notice as we go on here, as the morning starts to unfold, you'll notice that became the pivot. And then we had a number below, 558.60. That was an important number as well. And there's an and lower, and you'll see the and lower unfold shortly. So now let's fast forward to 9 o'clock. We're going to narrow things down. What I'm doing at 9 o'clock is setting up for my traders inside the numbers, live room members. Where's the morning trade? We're looking for the morning trade. We want a juicy morning trade. I want an opportunity to sell the morning high. I want an opportunity to buy the morning low. I want an opportunity to trade around the pivot. One of our favorite morning trades each and every day, almost every single day, is trading either back to the pivot or away from the pivot. Either way, we use the pivot more often than not for that morning trade. Well, let's see what we did today. The pivot was a target today for an exit, not final exit, but an exit. So we start out 9 o'clock. As long as they're below 559.70, the door is open to spike the low and rip it back up in the other direction. Well, what low are we talking about? 559.05, and the zone below that where they should bounce back is 558.60 down to 558, give or take. 558.60 down to 558, just a 60-cent zone. Right out of the chute, let's cut to the chase. Right of the vertical is today's activity. You're looking at an SPY 5-minute chart. 558.60 is this blue line. The next one is 558 even. They did the halfway home phenomenon. We call it the midpoint phenomenon in the live room. They went halfway between two numbers. And guess what? They ripped it back up in the other direction. And yes, we did. We picked off, once again, the low of day. Did we have any heat on the trade? Was this a trade where we were out of the money for more than A, a few seconds, or B, a few points? And the answer is no. They turned right around and ripped it back up in the other direction. Nice positive trade, took a base hit and let the rest ride. It's a risk-free, emotionless trade after the initial base hit happens. Nice trade around 2 and above. The gap left open yesterday at 560.73. 559.70 is that number we're talking about, and you'll see shortly that does become the pivot. It is the pivot. Now, the pivot is depicted in green because it has pivotish qualities, and you'll see they spike above it, but they come back down to test it here, here, and here. Once they're finished testing it, ate some time off the clock, and you folks that have taken the Lazy E-mini Trader course will notice they ate time off the clock. It was basically an on-time type of situation on this particular chart. Funny how that works. We'll give that a how do you like them apples, and they took off to the upside. The pivot was 559.70. Pause the video, read the notes, go back to the chart, and double-check the work. 9:17, still before the opening bell. 559.70 is the pivot. Above the pivot, and the bulls will try for the flat line. What was the flat line? 560.73. And there's your 560.73. Here's the blue line here. Not to say that they had to stop there, but what we do know is that was a target. They got above the flat line, came back to run a test of it back and forth, but the easy money was made from the low of day, mind you, on up to what we call in the trading parlance, the promised land. When you look at where they got to, right around 562, I think it was 562.05 was the high over here. That's about 34 S&P handles from the pickoff of low of day. Not bad for a rookie. Pause the video, read the notes, go back to the chart, and double check the work. 938, there's your 558.60. They can bounce it here, and they can also go a little bit lower. There's the zone. There's your base hit off 558.60 at 944. There's the pivot, and you can see as they start to rally, we're just going to navigate and narrate the thing. That's what I'm doing in real time for the live room members. That's what we're doing in text format for inside the number members, and basically caught low of day, and there's your rocket ride to what we call in the trading parlance, the promised land. Pause the video, read the notes, and circle back to double check the work on the chart. See if this is for real. If you have any interest in or are already trading the S&P, this is information that you want to know. You need to know. This is useful information. This is profitable information. Let's switch over to Camp IWM. Down $1.71 today, 7.8%. Spider was up basically 0.1% or so. So basically we had a leading indicator situation where the IWM was leading to the downside. There's a negative divergence to the S&P. We're going to take that information. We're going to make it a puzzle piece. We're going to put it on the table. IWM, small cap space, is my favorite market leading indicator, the Russell 2000. You have a big time breakup candle. Can they go back and forth inside this candle and build energy and make another move higher? We talked about this in the live room today as well. Yes, they can. Can they come down and make a test of the low area, the low vicinity? 220.38 is the low. No, 220.38 is the close. The low is 214.79, excuse me. Can they come back to 215, give or take, to make a low or to test the low? And the answer is sure they can, and still keep this bullish situation above all the moving averages intact. They can do that. They do that. Do that. Looking at the weekly chart, logically speaking, can they pull back a little bit after 3 tremendous weeks to the upside? And the answer is, of course they can. The obvious gateway to another leg higher is yesterday's high, and we'll just leave it at that for the time being. We'll move on to the next market. What about the folks down at the transportation department? Buttigieg's crew. Back inside of the triangle situation today. They were down 84 points, 0.5%, another negative divergence from the S&P. Of note, puzzle piece, and it's on the table. Again, we're going to focus mainly on the weekly closing situation for the DJT. We're not going to focus day in and day out. We're going to say this is much more important, this type of triangle situation, much more important on weekly close. So that's what we're going to focus on. We'll watch it day by day. We'll see what they're doing. But above all the moving averages, trend is your friend until she throws your shit out the window. And we're going to leave it at that. What about the Q people? Anything wrong here? Holding the 50-period moving average up about 0.33% today, $1.40 or so. There's nothing wrong, technically speaking, with the Qs. Above all the moving averages, trend is your friend. She's teetering on the 50, but as long as she holds the 50, she's above all the moving averages, and we take it at face value. What we're going to use as a bogey in the Qs is this low here. That's the gateway into no man's land. 468.38 is that low, and if she comes below that and closes daily below that, it's going to open up the door for all that white space and then the gap into these moving averages down there at 462, give or take. Every market has a bogey. What's your bogey? If there's nothing wrong with the financials, it's unlikely the other parts of the market are going to unravel. The XLF was up 23 cents today, 0.5%. They're teetering right around yesterday's high. There's nothing wrong with this market. We could simply just move it along. They're a little far from home base. Can they pull back? Absolutely. But as of today, technically, is there anything wrong with this market? No. Is there anything negative with the XLF? No. Is there anything bearish with the XLF? And the answer is no. At face value today. Smashmouth, holding the 100-period moving average, seemed to be in what I would call a pullback-ish pattern, more so eating time off the clock in this upper range here. I know it's a higher low or lower high situation, pardon me, lower high situation, but still you do have a bullish pullback-ish situation. Can certainly make a case that this is a pullback-ish, flag-ish situation, building energy for another move higher. As long as you hold these moving averages up here below the 20-period moving average, that's going to change the tune. So in the SMH, or Philadelphia Semiconductor Index, we're going to use basically the 20-period moving average on this chart as our, repeat after me, bogey. If I told you how much I appreciate each and every one of you, without you, these videos are not possible. And that is true and accurate information. We are pulling the ripcord here today. I'm David Frost, my strategic forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.